What is good, everybody? Today, I'm here to present my trading strategy 2022. Now, before we get started, I just want to let you guys know that this is a disclaimer. I am not a financial advisor. I am simply a trader who started trading for fun and now is able to do it for a living. Do not take this information and go and risk thousands of dollars just to try to make money quickly. Trading is a long game. It takes time to do this. It takes time to learn everything. And I always say this quote is my favorite quote of all time. If trading was easy, if anything was easy in life, everyone would be doing it, right? Not a lot of people do this, especially in these type of market conditions that we're in right now. And it's a very hard game to get by. But once you get past that learning curve, once you get past all that stuff, you will then start to realize that this is a very frequent thing you could do. Now, for me personally, the way I was able to come up with my strategy was just finding my personality. The first thing you ever have to find out about yourself in this game is about your personality. Now, identifying your personality is important because then you could build a strategy around it. Now, for example, myself, I'm the type of person that loves instant gratification. I'm the type of person where I want to feel accomplished as soon as I do the task at hand. So, whenever I do trade, I don't like aiming for swing trades. I like specifically aiming for day trades. Because of that, I discovered scalping and I went from there and just completely added on to my strategy, kept it very nice and simple, but super effective. So there's only three main things I do whenever I chart. First being utilizing levels, second being utilizing EMAs, and third, obviously and most importantly, reading price action. Now, I only use one added indicator, which are the EMAs. Everything else is you. You have to be the one identifying levels. You have to be the one identifying good price action and bad price action. And how you do that and how you become better at that over time is just consistently putting in time, putting in screen time, and keep pushing forward. So the first thing I do, chart my levels. What I want you guys to go ahead and do is go on your chart and find areas of interest on the chart and mark them as levels. I'm going to be using this chart as an example, and I'm going to be showing you guys a setup that I actually ended up taking. So once you've identified those levels on your chart, you want to go ahead and add the EMA indication. This is the name of my indicator. This is what it is. Click on it, and there you go. Now, when you first add the indicator, there's a ton of EMAs that come up, but the real ones that I only use are the 9 and 21 EMA. That's all it is. Once you've done that, you just want to start reading price action and watching candles. So we obviously gapped up Thursday into Friday open, and this was because of unemployment rates. Clearly, you could see that we were bullish coming into open because of that gap up we had an hour before pre-market, and I wanted to see how it would react off of open. Now, there are some times where I take plays near off open, but a lot of times I like to see the initial reaction into open. I want to see how buyers are reacting and how sellers are reacting. You guys could see that at open, we instantly started rejecting to the downside here. Sellers were stepping in almost immediately off of our first level here. We came down here, saw some fluid movement to the downside, just continuously breaking levels. And what I saw here was a flip of trend. You guys could see how fluid and how flush these sellers were at open. We saw continuous downside. We rarely saw any green candles, just straight fluid red candles. So what I wanted to do here was just completely continue to capitalize on this downside move here. I had the anticipation that we could potentially fill gap to the downside because of the way we were looking. And so what I wanted to do here is I wanted to catch a scalp for a downside move. So reading candlesticks, right, and seeing sellers fluidly step in, seeing them continuously and consistently step in, I had read that obviously trend was downside. Once we broke these EMAs, once we broke our levels, that also told us that, sellers were still completely strong here regardless of how much they pushed it. So what I wanted to do was enter off a pullback. Now the reason I enter off a pullback on a trend play is because whenever you miss the initial move, you never want to buy into strength. I always preach scaling into strength, meaning selling into strength, never buy. So you can see when we were coming down here, we saw sellers just immediately flood and we were able to come off and curl. This was the perfect entry point, in my opinion, for a pullback retest entry on this trend. But I really liked the EMA retest here on the 9 and our level retest. Whenever you get two confluences of retest at once, it's a very, very good sign that we'd see continuation to the downside. So we saw a perfect replay of that again over here. We came down here, sellers were aggressive. We saw our pullback, our premature bounce here. We saw a rejection off 373.65, and we saw a rejection of the 9 and 21. Now, another thing I want to point out is EMAs crossing over. Whenever you see something like that, it's a signal that, we can see more downside here. And that's exactly what we did. So what we did is, in my Discord, we took a entry off the tweezer candle. And if you guys don't know what a tweezer candle is, basically where two candles test near a similar level of resistance, but they both reject. It doesn't always have to be a perfect wick, but it could just be a tweezer in the sense that both candles got rejected off that level, and that's exactly what had happened here. This first initial candle here at 946 rejected, and I saw that as a possible entry point, but I always like to wait for confirmation closes to see how we react off the next candle. What I mean by that is you can see we closed off this candle right here, but on this candle, it looked like we bullwick, but I was able to tell that sellers were still strong here because we did end up coming back up to this level of resistance here, and we rejected once again. We took our entry off this tweezer top right before it closed, anticipating the tweezer, and we got it. We trusted it. Our conviction paid off, and we immediately saw downside. Now, this is more so a quicker play than normal, but what I like to do here is scale a lot. Whenever I enter a play, I like to scale a lot just so you can lock in those profits and still have runners at the same time. Whenever I'm in a trade, I like to feel instantly rewarded whenever my trade goes correct. So I scale half of my position every time I see 20 to 30% immediately. This play ended up running for a total of 50%, but I was able to scale my base at around 25 to 30% here with instant profits taken. Now, the second half of my position, the remaining 50%, were running. And what I mean by running is they were just continuously growing. As you can see, the stock was seeing downside. We went from there, continuously scaled, and eventually I had a few runners where I had my trailing stop loss on the 9 EMA. Now, whenever I enter a trade, I always have my stop loss set at a key level or EMAs. And the reason I do this instead of utilizing percentages is because I feel like I could trust my charts a lot more than percentages. Percentages don't predict what happens in the market, levels do. Now, a great thing with having a stop loss set as your 9 EMA or 21 EMA is they're trailing. And trailing basically means they're always moving with the chart. So say, for example, we saw a massive knife candle here, EMAs would have caught up with that move. Hence, if we came back up here and broke through again, you would still exit your runners for green. That's exactly what happened here. Once we scaled here flush, we scaled 25 to 30%, and then we scaled more as we received more downside. We eventually had the rest of our runners get caught and cut loose for a green trade still. Our main contracts, right, are 50% base, and the remaining 20 to 30% that we scaled out after got, sold for a very profitable amount. And the runners we had left in the play did get cut, but they still got cut for green. My stop loss on this play was this orange line, this 9 EMA here, and once we broke past that, a full candle close over, we immediately cut. And even when we cut, we still profited. This is a perfect example of what a scalp is and how to properly manage your risk. Whenever it comes to the stock market, you guys have to realize that it is not your friend. Your objective is just to make money and get out. At any moment, you can see a macro catalyst or a news catalyst come in and just completely destroy the charts, leaving you miserable. But when you have proper risk set in place, just like how I described, and you trade with your strategy, you can really become successful in this market. And yeah, that's pretty much it. I hope you guys enjoyed this video, and I'll catch you guys next time.